Welcome to the Division of Local Services webinar relative to the role of the accountant. My name is Jennifer McAllister and I support training initiatives here at DLS. As many of you know, DLS promotes sound municipal finance management practices and supports local officials by providing guidance, training, and oversight. Before we get started, I want to remind participants that this webinar will be recorded and posted on the DLS YouTube channel for future reference. The PowerPoint presentation will also be shared along with any referenced links. Please submit any questions you may have using the Q&A function on the menu bar, and they will be answered at the end of the presentation. Today's presentation will be led by DLS staff, and to kick it off, we'll be hearing from Bobby Colburn, and I'll give it to her.
Hi, I'm Bobby Colburn. I was previously a town accountant for about 12 years before coming to work here at the Bureau of Accounts at DLS. I've been here for about 8 years now, and I will be bringing the Bureau of Accounts perspective to the presentation.
Good morning and welcome. My name is Marcia Bohank, and I also was a town accountant for close to 10 years. And as of tomorrow, I will also have 8 years with the Division of Local Services, and I'm in the Financial Management Resource Bureau. For several years, the Resource Bureau has reviewed financial operations, including the offices of the accountant and auditor as they perform their roles and their processes, their challenges, and how they interact with other finance officials. So using that experience of being a town accountant, as with Bobby, we put this presentation together to review the roles and responsibilities of the accountant and the auditor. We will first lay out the office structure for accounting, followed by the system structure. We'll then present the most common ongoing responsibilities, fully acknowledging that the list is not complete. We'll cruise to the end of the fiscal year, go through some annual responsibilities, and then finish with trends that we're seeing in communities and some resources. And I'm going to... So first, with the first section we'll lay out is the office for the accounting position. So the position of town accountant is created by communities accepting section 55 of chapter 41. This authorizes the select board to appoint a town accountant for a period of 3 years, and it may go up to 5. The accountant is sworn by the town clerk to the faithful performance of her or his duties. The accountant cannot hold any other town office involving the receipt or disbursement of money, except they can serve as the town clerk. Section 18 of 43 and 48 of 41 give us the city auditor, who is appointed by the city council to hold the office for 3 years, and again, can go up to 5, with basically the same duties as the town accountant, along with other powers and duties as the council may prescribe. Again, back to chapter 41, section 49A provides for an assistant auditor or accountant who may be appointed by the accountant or auditor with the approval of the mayor or the select board. This position is also sworn to the faithful performance of her or his duties and can perform the duties of the accountant or auditor in their absence. And last, chapter 43, section 11 gives us the Consolidated Department of Municipal Finance. We see this as an increasing trend across the financial organizations. But to make it official, it needs to be approved by the legislative body by ordinance or bylaw. It may include the offices of accountant, auditor, or comptroller in some places, treasurer, collector, and assessors. A finance director is appointed for the same term of office, 3 years, but no more than 5. The appointment is by and responsible to the chief executive officer or to the chief administrative officer of the city or town, as specified by the ordinance or bylaw. A finance director can serve as any of the financial positions, but as with the accountant or auditor, the finance director cannot serve both the accounting function and the treasury collection functions. Finally, the finance director is responsible to coordinate all of the financial services and activities. If we go and look at the structures, we see in small towns that the accountant is reporting directly to the select board, as is the treasurer or the collector. And we're still seeing a few places where the treasurer collector may be elected, as was the board of assessors with the assessors. In larger towns or medium-sized towns, we introduce a town manager or administrator and have a little bit separation between the select board and the accountant and the other financial positions. And then in larger towns or cities, we introduce the finance director. And again, the structure then is the other financial offices reporting into the finance director and then into the manager or the mayor. So the majority of the town accountant and city auditor's duties are the same. Yes? Okay. Primarily, they're responsible for maintaining, preserving, and reporting on all the financial information for the community according to Mass General Law. They must also comply with federal and state regulations. Additional responsibilities may be required of the position based on local ordinances, bylaws, or even job descriptions. They are also accountable for establishing and managing internal controls. This means ensuring all transactions and actions are initiated by a source document. The accounts are reconciled with all the other financial offices, and the office is organized such that the financial reporting can be accomplished. And finally, they must maintain a general journal for all activity. And that is the basis for today's discussion. But first, it's important to understand that the accountant or auditor does not stand alone. Financial practices are most effective when there is coordination between the other financial offices. We routinely recommend establishing a financial management team that meets regularly to discuss common goals and objectives, nurtures camaraderie, and provides continuity during times of turnover. So the core team consists of the town administrator or manager, a finance director, the accountant or auditor, the treasurer, collector, and assessor. But the others that need to be part of that team include the school business manager, maybe human resources, maybe IT, the town clerk, the city clerk, and others that can contribute to the discussion of the day. It's also a good place to introduce the assistants, the assistant treasurer or the assistant accountant, actually the assistant treasurer, the assistant collector, so they start learning what is going on and being fostered by that team. But so that's the point of the team, to break down silos, foster a healthy working environment. Meeting with the team helps the routine tasks that we get into. And if there's an understanding of each other's roles, responsibilities, time crunches, everyone's job just gets a little bit easier. So we'll first get into system structure by understanding how the accountant or auditor must maintain the records. So to meet the key responsibility of maintaining the financial information, the accountant or auditor must keep a complete set of books. This means recording the amount of each appropriation from the legislative sessions, town meeting for most towns, council meetings for cities, and some towns with a council form of government. The amounts and purposes of the expenditures, this is established through the budget process and approved by the legislative body. The accountant or auditor records the appropriations exactly as voted. Generally, only the legislative body then can alter what was appropriated, except for certain year-end activities that we will discuss later. The receipts from each revenue source are the different receipts: real estate taxes, personal property taxes, motor vehicle excise, fees, interest, utility charges, etc., must be maintained separately. The amount of each assessment levied, back to real and personal property taxes, the accountant or auditor needs to record exactly how much revenue is expected. The budget is based on these amounts being collected, so the amount is recorded in offset with the revenue. And the last bullet, the abatements and exemptions, are alterations to the levied assessments. To reconcile, which we'll talk about later, any adjustments must be recorded. So how do we keep this information? Because it sounds like a whole lot. Well, we have what we call UMAS, which is the Uniform Massachusetts Accounting System, and that tells us how to do it. So every accountant or auditor uses some sort of financial management system. Munis, Vadar, SoftWrite, there's a few others out there. Each system is built on a chart of accounts, which is the name we give to how we classify information and code transactions. Unfortunately, in Massachusetts, we don't have a standard chart of accounts, but as time goes by and more accountants and auditors comply with the UMIS manual, the charts are becoming more and more similar. Also, as communities convert or upgrade their financial systems, the chart gets cleaned up and closer to what is detailed in the manual. Tweaks to the chart also happens when there's a change in the accounting position. I know because I did it too. The key to the chart is organization so that it can be easily reported. Bobby will talk about this when she gets to the year end and the balance sheet processing. But just remember, a messy chart of accounts just adds unnecessary layer of difficulty. The appendix in the UMIS manual is the best source to understand how the chart of accounts should be organized, specifically if you go to appendixes B through G. And we have a link to the manual later in the presentation. So just a little bit more on the chart, not to get too bogged down, but it's important to understand how it's developed, and also for non-accounting personnel that are looking at certain reports, that it helps it all make sense. So there's three main levels: the fund code, which we'll go into next, the type of account. There are 5, with the first digit identifying what it is: assets, liabilities, fund equity, revenues, expenditures, basic accounting jargon, and then subcategories. 5100 series is personnel related expenditures, 5200 is purchase of services, 53 supplies, and so on. So we mentioned fund code first. We're just going to go through the fund structure pretty quickly here, starting with the general fund. It's always Fund 1. It might be 01 or 001, but it's always first. It's the largest and most important fund where most of the activity occurs. Activity that is specifically not designated to another fund belongs to the general fund. So you know you're an accountant or an auditor when you find yourself telling someone all money received or collected from any source by a municipality belongs to the general fund and can only be spent after appropriation unless a general or specific law provides an exception. We've all said it. For some reason, it's something that everybody needs to hear, but that comes straight from Chapter 44, Section 53. So if you need that reference, that's where to look it up. The general fund houses the budget as authorized by the legislative body. Therefore, that's the source when the free cash is certified, because that's the fund balance available for that calculation. Special revenue funds are the place where the proceeds for specific revenue sources are legally allowed to be put into place. Those accounts must be established by statute or by guidance from the Director of Accounts. So you cannot just make a special revenue account to squirrel money away, although many have tried, and there's still probably some of those accounts, but your Bureau of Accounts representative will find those. These funds include receipts from annual revenue, such as community preservation funds, reserves for appropriation, like ambulance and waterways, revolving funds, like your arts lottery, your departmental revolving funds, and gifts and grants. Capital project funds are the account to report the financial activity for capital projects. They're not the capital outlay. So generally with capital project funds, financing is provided in whole or in part by using the long-term debt. The expenditures are made over multiple fiscal years, and the expenditures are project-oriented, not part of the regular ongoing operations. Enterprise funds are provided in Chapter 44, Section 53 F.5, or the newest one, F and 3/4, or a special legislation that basically mimics the law. Enterprise accounts maintain separate accounting and financial reporting for municipal service for which a fee is charged. So think utilities, water, sewer, recreation. Some communities have golf accounts, or the PEG access, which is the new one, the public education and governmental funds. The enterprise free cash is known as retained earnings, but it follows the same rules as for free cash. It must be certified by the Bureau of Accounts, and it needs to be certified for appropriation for future use. The last thing about enterprise, they can charge back to the general fund for indirect costs. And that means that what is appropriated in the general fund, but it's attributable to the enterprise fund, things like personnel costs, think retirement contributions or health insurance, Medicare taxes, or administrative services such as what other departments do. So the accountant auditor's time for accounts payable or payroll, collections, banking from the treasurer collector, or expenses, IT costs, insurance, legal services. Basically, for indirects, it's a good idea to have a policy of how they are being calculated and charged back, because they need to be reasonable. And then the last set of funds are the permanent and fiduciary funds. The expendable trust funds, interest and principal may be expended, but it has to be consistent with the trust documents. Scholarships, cemetery perpetual care funds. Non-expendable is only the interest may be expended, so the principal stays invested. And then the last one is agency funds. It's where the city or town is acting as an agent for the fund. Payroll withholdings that will be remitted to a provider. Police details that the money is collected and paid out to the officer providing the detail. Student activity agency accounts, which is held for the students. Just remember that the agency funds are not part of the government, but are held in trust. Almost done with this piece of it. So as we said, the ledger needs to reflect the amounts and purposes of the expenditures. This is where the subcategory codes come in, and they start with the 5. They're combined with the function and the department code. So you will see the individual department. Accounting is often 135. It's part of the general government, and all of the accounts associated with accounting will have that code. Reference is, again, UMass Manual in Appendix F. So in the next section, we'll get into some of the ongoing responsibilities of the accountant or auditor. And I'm going to turn it over to Bobby for a couple slides.
So I'm going to talk about some ongoing responsibilities. These include warrant processing, payroll, reconciliations, and some others. Probably the largest part of the job the accountants have is the approval of bills and the processing of warrants for payroll and payables. This is where many of the Mass General Law duties intersect. Depending on the community, this is either a weekly or a bi-weekly process. A warrant is a grouping of invoices or payroll that get processed together, posted to the ledger, and then the checks are generated. So for each payroll or payable warrant, the accountant reviews each timesheet or payroll summary or invoice for accuracy and reasonableness. They ensure the payroll or invoice has been approved by the authorized signer or signers, that the funding in the account that it's coded to be charged exists, and that all relevant procurement guidelines have been followed. They also should be reviewing the invoice and see that the materials have been received or services have been rendered and that no fraud is evident. And they check that the expenditure is in line with the parameters of the account that is being charged. In the general fund, it needs to be an expense that's intended in the operating budget. Once they've reviewed all the invoices, they prepare the warrant. It's submitted to the select board, city or town council, mayor or town manager for approval. And then they transmit the approved payment information to the treasurer for funding and disbursement. When they post the warrant, they update the general ledger with the accounts payable and payroll expenditures. In the case of payroll, some accountants process in their office and others just review the final payroll. When I was a town accountant, the payroll was processed in my office, but in Marcia's case, it was handled in the treasurer's office and she reviewed the changes. Some of the activities for payroll include maintaining the employee master files, processing the payroll in-house, or entering the data and sending the information to the payroll vendor if it's outsourced. In either case, they reconcile the payroll reports to the general ledger control totals and balance the final payroll proof components. Marcia is now going to go over reconciliations.
So reconciliation is one of the most important ongoing responsibilities of the accountant or auditor and requires cooperation and coordination with financial and other city and town officials. Just know there's never a lack of something to reconcile. So regular reconciliations to the accountant's general ledger or to the treasurer's cash and collector's accounts receivable is the basis of strong internal controls and good cash management practices. A lack of prompt and frequent reconciliations undermines the credibility and integrity of the community's financial position by putting at risk for fraud or undetected errors. The accounting officer uses the treasurer's cash book data to reconcile to the general ledger. Regular cash reconciliations aid in preventing fraud, and if fraud has happened, will be the way to find it. Accounts receivables are outstanding monies owed to the city or town. The collector maintains a control book for each committed receivable. Then the collector reconciles that control book, which is then used to reconcile to the accountant's general ledger records. Examples of departmental receivables that need to be reconciled are ambulance and police detail accounts. The assessor and the collector reconcile commitment and warrant data before the property bills are produced. Then the assessor independently forwards this information, the commitment and the warrant, to the accountant or auditor to record in the general ledger. When the assessors grant abatements and exemptions, the revenue is replaced with the allowance for abatements and exemptions account, which is also known as the overlay account, which is under the control of the assessors. So the assessors should be maintaining their overlay balance, and that needs to be reconciled with the accountant or auditor. If the information from the collector or the assessor does not agree with what is recorded in the ledger, the records will not balance. Reconciling payroll withholdings may be in the accounting, the treasurer, or even the HR department. No matter where they are, payments of the invoices, because with those withholdings, think health insurance, will likely create a deficit if not reconciled. Also, this is an area that can cause large expense to the community if the deduction amount is not in sync with the bill. Paying for single coverage and actually being enrolled in family coverage is a common place that we see. Withholdings maintained in the agency accounts should be reconciled to zero as they are being held for the provider. Software all has a subledger, which must be tied to the general ledger. The subsidiary ledger stores the details for the general ledger control account. Information in the subsidiary ledger is summarized and posted to the control account in the general ledger. And it's word salad, I get that. But one would think that this is all automatic, and I only bring it up because in some systems that link can be broken, or even a journal entry needs to be independently created to modify each of the ledgers, the subledger and the general ledger. Pay attention to this, because if it gets broken and not caught, it's very, very costly to fix and just generally painful. And then the last type of reconciliation are the departmental receipts. And the receipts are entered by the treasurer, but they go independently to the accounting office, so that when the accountant receives the file from the treasurer, The accountant can view that information directly from the department to make sure the treasurer and the department are saying the same thing when it hits the ledger. Department heads should be keeping a running tally of invoices submitted to accounting for payment. That way, when they get the month-end accounting reports, they look at both the revenue and the expenditures to make sure everything is properly recorded. So just real quickly, where does it go wrong on the reconciliations? This is one of the biggest areas, Bobby can certainly speak to this, where communities get into trouble. And sometimes it's just a lack of communication with the team and lack of cooperation. Sometimes it's just the team members just have a hard time getting along. A bad chart of accounts, if it's not constructed properly, it can lead to repeated problems when you're trying to reconcile. A lack of training. If you're having trouble reconciling, seek help with your peers, the association, or even outside consultants. Every financial system has some reconciliation functions, but if they're not set up right or they're not maintained, they're not really very helpful. And a lack of time and attention. Some communities fall into the "I'll do it later" syndrome, and that's never a good idea, because the longer you put it off, the harder it is to bring it back into balance. Just remember, unreconciled accounts, if material, will be seen as a weakness by the independent auditor for the city or town. It could adversely affect your bond rating. So when you go out to borrow, it's more expensive. And it will most likely hit your free cash as a reduction when the Bureau of Accounts comes in to certify your free cash. Back to the financial team meetings that we spoke of earlier, it can be real helpful for establishing some protocols and holding parties responsible. So coming from the Financial Management Resource Bureau, when we do a lot of policy documents, so I have to throw in some policy language here. And we really recommend a policy to prioritize reconciliations. That way you can assign the dates, the responsibilities, the resolution, and the reporting requirements. And what you're seeing on the screen is a page from one of our policy documents that lays out who's doing what and when. The reconciliation should be formally documented, attested to by the appropriate personnel, maintained on file, and available for either internal or external audit and review.
Some of the other responsibilities include routine activities such as verifying and posting of cash receipts. This is extremely important, as Marcia said, because no reconciliation can be done until cash receipts are posted. The recording of commitments and abatements and exemptions received from the assessors. Some examples of these are for real estate and personal property, motor vehicle and other excise, and special assessments such as water. It's important to post these as well, because these entries plus the cash receipts will give an accurate picture of the receivable balances. Some other activities are monitoring the various appropriated budgets for deficits and monitoring grants and other special revenue funds for possible year-end deficits and timely reimbursements or receipts to prevent them. For example, a 911 grant that's projected to be in deficit as of June 30th could have a reimbursement received prior to September 30th that could be taken into consideration to offset that deficit. Otherwise, it's a reduction to free cash. They maintain custody of all contracts and ensure all expenditures follow the specifications of the contracts. The payroll and personnel action forms are generated for the beginning of the fiscal year and are based on approved contracts and appropriated budgets. Mass General Law, Chapter 41, Section 58, is the statute that requires the town accountant to distribute at least once a month appropriation status reports to the select board, each board or committee and/or department head. These reports show the budget, the year-to-date expenditures, and the remaining balance so the departments know where their budget stands. Some communities have a decentralized system where the individual departments have access to go in and run their reports on their own. And they prepare financial information reporting whenever it's required. sometimes things pop up, such as all the reporting programs that were related to COVID, the CARES Act, ARPA, and FEMA. They also maintain the general ledger, as Marcia had mentioned. They add accounts as necessary, ensure the mapping to the control accounts is correct. Each fiscal year, the property tax and excise receivable accounts need to be created, and new expenditure accounts are added as needed. They close old unused accounts so the general ledger doesn't get too unwieldy. And they provide financial assistance to departments, committees, and boards as needed. They answer questions, help with new employees, help with new grants or revolving funds, provide financial analysis as needed, and generate reports as requested. Marcia's going to talk about some financial planning.
So the accountant and auditor or auditor will be expected to participate in financial planning activities to some degree. This will vary by community based on the structure or even the staffing. But these activities can include monitoring or even creating financial policies and procedure manuals for compliance and looking for areas of improvement, maintaining a multi-year financial forecast. There will be a new posting on our website this week. Check out this week's City and Town for information on that. Supporting capital planning process. This may include maintaining an asset list. Think about your fixed assets on your financial statements, going to committee meetings, as Bobby just mentioned, gathering data, and or maintaining the capital improvement plan. As you can see, just again, we're all about the Venn diagrams here today. All of the intersection of all of those pieces. Bobby?
So now we're going to talk about the general ledger closing. Closing the books, the balance sheet, the reporting, the tax rate recap, and the budget. For the general ledger closing, it's important to begin early and define expectations for the various departments. There are many things going on during the closing of the fiscal year, so the organization is key. One of the ways the accountant can be organized and keep the departments organized is to create and distribute year-end calendar and memo with year-end tasks and cutoff dates, and holding a department head meeting to go over it all. This puts everyone on the same page to minimize issues. The Director of Accounts issues the year-end letter for various municipal officials. The accountant should read the letter when it's distributed, as there will be topics in there that affect year-end submissions. Beginning in May, the accountant should regularly review budget accounts and other funds for deficits and potential deficits, and working with other department heads, determine a resolution. This might be a reserve fund transfer, year-end appropriation transfer, or if necessary, a town meeting or city council vote. As I mentioned before, any funds in deficit on June 30th, reimbursement requests that a community wants counted towards that deficit must be received by September 30th, with the exception of the Chapter 90 programs. Those just require that the reimbursement is requested prior to September 30th, not necessarily received. This is an example of a year-end closing calendar that an accountant might use. It lists the actions required and the due dates for both the current fiscal year and the new fiscal year. The accountant will be working with 2 fiscal years while closing one year and beginning the other. Some of the actions at year-end are requesting any necessary appropriation transfers for budgets and deficit. These need to be voted on by the Select Board and the Finance Committee. And per Mass General Law, the last date these can be voted is July 15th. It also could include last payroll and payable warrant dates for the fiscal year, and the due date for encumbrance requests from departments for any purchases that have been made or services that have been received prior to June 30th, but the invoices have not yet been received. So some activities during the closing are to review the trial balance and make sure the accounts look reasonable, that the assets have a debit balance, the liabilities and equity accounts have a credit balance. They ensure the cash and receivable reconciliations are up to date. These need to be complete in order to finalize the close of the general ledger. They also ensure that the due to and due from accounts and the property tax overlay deferred revenue triangle net to zero. If these don't net to zero, they will be a reduction to free cash. Then the year-end entries must be prepared and posted. These include unrealized gain and loss on trusts, if these aren't already posted with the cash receipts from the treasurer, any revenue accruals that need to be made. They need to record any long-term debt transactions in the long-term debt account group for both principal payments and any new authorizations and issuances. The balances in the long-term debt account group should reconcile to the statement of indebtedness. They also record fund balance reservations so that the starting point for free cash is accurate. Then all reconciliations must be finalized so that the balance sheet and supporting documentation can be prepared and submitted to the Bureau of Accounts. The balance sheet shows the community's operation results and illustrates the financial position as of June 30th. This is one of the most important reports submitted to DLS, as it's required to certify free cash and retained earnings in a community. There's a balance sheet template that we provide that must be completed and uploaded that includes a combined balance sheet, as well as some fund details for other funds and an undesignated fund balance roll forward for the general fund that we use to determine if the balance is correct. The balance sheet and supporting documents are submitted to us using the DLS Gateway application. There are also some required supplemental reports with the submission, such as the balance sheet checklist, the treasurer's year-end cash report, outstanding receivables, statement of indebtedness, etc. In addition, we require a system-generated trial balance and undesignated fund balance activity report for the general fund to be uploaded, and any other documentation or reports we deem necessary for that certification. So here are some due dates for year-end filings with DLS. The date listed for the balance sheet submission is really just a target date and not a hard due date. But I want to note, communities cannot appropriate free cash or retained earnings prior to the certification by us. So the deadline would be prior to that. And we do ask for at least 2 weeks turnaround time. Other submissions have hard due dates, like snow and ice data sheet, the treasurer's year-end cash report, and most importantly, the Schedule A. The Schedule A is due by November 30th per Mass General Law, and if not submitted timely, it may lead to state aid being withheld from a community. Town accountants are required by Mass General Law to prepare an annual report of the financials. This includes all receipts and expenditures of the past fiscal year, the appropriations and expenditures by the spending purpose, and any changes in debt and outstanding balances. The Schedule A is a report of the revenue and expenditures of the prior fiscal year and changes in fund balances broken out into specific categories. It is a federally required report, but now we also utilize some of the data in our municipal dashboard and other reports available on our website. And the accountant is also responsible for generating and distributing IRS Form 1099s. These are due at the end of the calendar year and are based on accounts payable vendor distributions. The accountant also oversees the external audits. This includes preparing reports required by the external auditors and possibly preparing the annual comprehensive financial report. They prepare or coordinate the responses to the line items in the management letter issued by the auditors. If there's a school department in the city or town and not a regional school district, the accountant is responsible to review and certify the accuracy of the DESE end-of-year report. This is also a report that, if not submitted timely, can have local aid withheld. The tax recap is where a community reports their budget plan for the next fiscal year and sets their tax rate. It includes all appropriations made since the previous year's tax rate was set. It also includes anticipated and actual revenue sources other than property taxes. And as with all submissions to DLS, the recap and supporting schedules are submitted through DLS Gateway. The accounting officer's responsibilities for the recap may vary by community. It's generally a local decision, but this is one process where the various offices working as a team will have a big impact. In some communities, the accountant prepares most of the schedules, and in others, they just review and sign the supporting forms. When I was a town accountant, our assessor actually entered all the information into our recap, but we met as a team and went over everything prior to make sure we all agreed. There are a few things that the accountant has a responsibility for. They need to determine any deficits or other amounts that must be provided for on the recap. This would be reported on page 2. They might include final awards, snow and ice deficits, or any other deficits that need to be raised. On page 3, they report the local receipts from the prior year and estimate the next year's to meet the budget needs. They need to analyze these and ensure that the estimated local receipts are not unreasonable, because that will hold up the tax rate setting process. And they also need to verify the appropriations and funding sources as reported on page 4. Although the clerk signs page 4, the accountant is certifying that the entries on page 4 are accurate when they sign page 3. So as I mentioned before, they also prepare and/or sign most of the supporting forms of the recap. Not everyone has offset receipts, but if they do, the accountant and Board of Assessors sign the A1. An A2 is required for each enterprise fund in a community. The accountant provides the prior year revenue received so that we can compare the prior year actuals to the next year estimates for reasonability. An A4 is required if a community has CPA, and the accountant would sign this. On the B1, the accountant is ensuring that the free cash appropriations are not greater than the free cash certifications. And the B2 is where appropriations from other available funds are reported. The accountant verifies the amount in the available fund at the time of the appropriation is equal to or greater than the appropriation. On the OL1, the accountant provides the June 30th balances of the overlay account, as well as the personal property and real estate receivable balances. As Marcia mentioned, the overlay balance that the accountant has in the general ledger should reconcile to the balance that the assessors have. The DE1 is signed by either the accountant or the treasurer. And as previously mentioned, the accountant signs page 3, and with that is also certifying the amounts reported on page 4. So now we're going to talk a little bit about the budget process. The development of budget in a community is determined by a few factors: the governance, the charter, ordinances, or bylaws in a community, the structure of the government, whether there's a finance director, a budget officer, a mayor, or a manager, and the size of the community. Depending on these things, the accountant might be heavily involved, even preparing the budget, or they may just provide financial information and analysis to others. The accountant monitors the budget by recording any voted appropriations in the general ledger. They maintain budgetary control by keeping up-to-date and accurate records. As mentioned before, Mass General Law also requires the accountant to produce monthly budget to actual expenditure reports for the departments. These reports help the departments ensure they are within their budgets, and they help the accountant identify any issues and prepare any year-end appropriation transfers that need to be made. Budget to actual revenue reports also should be generated at this time. Some communities don't post the revenue budget into their general ledger, but it really is recommended because the budget to actual revenue reports will help determine if the revenues are coming in as projected and identify if any adjustments to the budget need to be made. The accountant is also required to prepare a report of the prior year budget to actual expenditures, current year budget to actual for the first 6 months of the year, and estimates for the remaining 6 months, and the estimates for the next fiscal year. This is usually what's included in the budget document that's presented to the legislative body, the town meeting or city council. And now Marcia's going to talk about trends, statutes, and resources available.
Thanks, Bobby. Just wrap it up here. So a whole lot of information, and just wanted to talk some of the things that we're seeing out in the communities as trends and some best practices. The first one being remote entry, and communities really starting to use their financial systems as for the features and functions that they have. With the departmental receipts, the accounts payable, having the departments actually put the data in directly into the system, and then it just gets transmitted into the accounting office. Basically entering data once. We see still in some communities that departments will enter information into an Excel spreadsheet, print it, goes to the treasurer, gets input again, and in some cases we see it actually input a third time in the accounting office. So trying to streamline that, we find that the time saving and the efficiencies and the more accurate input really is a cost saving at the end. Time and attendance is same thing, using the payroll systems capability for direct input. Taking it a step further, some communities are going paperless. Online monthly revenue and expenditure reports that Bobby just spoke of for the departments to review and reconcile. If those can be created in PDF form and emailed instead of printing. Accounts payable, the departments just attach invoices instead of making several copies of them. Warrants have online approvals. Again, save a tree. The warrants can be quite chunky. Take it even one step further. Some communities are using some self-service products for vendors to actually upload their invoices. It goes right into the system, the bills are paid, and then the payment is made via ACH. So completely paperless. Takes time, it's an expense to get it started, but those are the things out there and ways of becoming efficient. Some transparency. Lots of communities are using some packages, OpenGov, ClearGov, to post on their websites revenue and expenditure information. There's another option to that, the DLS data bank. We have all of that same data that we're warehousing. Just remember, everything that you send to us, we have, and we'll give it back to you in our data bank. So instead of using those expensive packages, communities are using that. And the other thing is budget documents. There's a trend, again, getting more information out to the residents and the taxpayers to give more information. The GFOA, the Government Finance Officers Association, has a list of what they feel is important in a budget document. Their list is long. It will take a couple of years actually to compile it all. It's not something that anybody has time to do all at once, but take a look at that list and just pick and choose what might be helpful for the community. On the governance side, professional development, networking with other accountants and auditors at conferences and local meetings is invaluable. There's usually a Bureau of Account representative in attendance and quite possibly actually presenting. The Director of Accounts closes each session with an update that will keep you current on all of the changing laws and requirements. Lunchtime conversations, how to do something on a system or a process will just let you know that you're not alone. Also, plan for succession. The assistants are moving up to accountants and auditors. There's retirements. There's always opportunities. So you want to keep learning. you'll never know everything, so use what is available to keep fresh. Sheridan Regional Resources, especially in the western part of the state, we see a lot of accountants in multiple communities. Sometimes this is done formally with an IMA. This is probably the better way to go. The time requirements can be set when the accountant needs to be at town hall. There can be performance goals and actually provide for benefits. Whereas in the informal, what we're seeing is towns have an accountant that shows up when they kind of have time and can fit it in, that there's no set schedule, and that's not always working. And then the last one is contract services, which is another answer to lack of people available to be an accountant. Just remember the consultant is still the appointed official, subject to the same statutes. This means the consultant must be formally appointed by the appointing authority and sworn in by the clerk. They're responsible for signing the documents, including the warrants and the gateway submissions. And importantly, it's up to management, the town administrator or manager, mayor, to monitor the consultant's performance and ensure conformance with all statutory requirements. Basically, make sure you get what you're paying for. So a couple slides just highlighting some of the most important statutes. We've talked about most of them. The ones in blue are really important. I'm going to talk about a couple. 54A is coming up due August 1st. Can't believe it's almost the end of another fiscal year. That's where the assessors, when the assessors are expecting the revenue for the just closed fiscal year. It's kind of the first step in completing the recap. That's kind of predicated on all of the revenue being updated, which hopefully would be reconciled. So keep your calendar, know when things are due. Section 58, just again, requires monthly reports to the select board and the department heads, boards, and committees. There are also a requirement to notify if expenses have exceeded appropriations, which really should not happen. And as we go to the next page and we see chapter 44, section 31 says that it forbids overspending of appropriations except for specific emergencies, flood, fire, hurricane, tornadoes. We've seemed to have had them all in the state recently, but that needs the governor's declaration of a state of emergency and a vote of 2/3 of the members of city council and a majority vote of the select board. The one in addition to that is the 31D, though, is the snow and ice, which can be overspent with the approval of the chief administrative officer. The anti-aid amendment, this pops up quite a bit. It simply states you cannot use public money for private purposes, no matter how worthy the purpose. We often get that question. There's often on town meeting warrant an article that wants to give some organization some taxpayer money. There's two links on this page. The City and Town February 2006 article addresses using taxpayer money. Us old-time accountants always had that printed, and we referenced that article quite a bit. And then something a little bit more recent is from the 2021 Municipal Law Seminar, also goes into municipal expenditures. Resources, this is our homepage. The QR code will take you to this page. It has everything that you well, it has a lot. I was going to say everything you'll need, but I don't want to talk in absolutes. But we have all of the training videos, the PDFs, the IGRs, our data bank that I referenced that some communities are using. to post on their website and our City and Town magazine. And we also have the link to the state aid on that page. Next, we have, these are 3 incredibly important manuals. The Auditor's and Accountant's Manual, the UMass Manual, which we've talked quite a bit about. And then the third one is the Municipal Glossary. And I put that up because when I was first accountant and studying for the certification exam, I used that manual quite a bit, and it just helped me understand the nuances of the words that I kept hearing. And I just, it was just something that I used quite a bit. The next page is just a link to the associations. Real quick, the accountants and auditors, actually collectors and treasurers, have mentor programs now. There's a page right in the front of the manual describing the accountant's mentor program. If you're new and you feel like you need some help, contact the association and they'll hook you up. Sometimes looking at the other manuals is very helpful. We interact a lot with the treasurers, the collectors. They also have manuals that will describe their interaction with the accountant. So just another resource. And then the last page is more resources, just a list where you can find everything. Mention City and Town. If you have not subscribed, there's a link of how to subscribe. It's always full of good information. And as I said, referring back to the 2006, so it's worthwhile. And that's it.
Thank you, Masha. Thank you, Bobby. We can take a few minutes to take some questions. And just as a note, we will be sending along if you registered for this program, you'll get a